Hey, this is Chris. I'm about to restream to the YouTube live. Say hello to my snakes in the back, but my kitten's been in here opening the tubs, so I'm getting a little worried about maybe snakes getting out. So if you happen to see any snakes like wandering around me, let me know. So I get a little worried about it just to let you know. So in there. So that's what I'm watching, and let's just see if anybody is paying attention. So in there. But getting back to it about the markets, what do I think? Well, it really doesn't matter what I think when it comes to this. There's just but huge disparity. Let's just put it that way. Huge disparity. What do I mention about that? Well, what I mean by that is look at the advanced declines on the left. Yeah, look at that sucker. So look at that. Horrible. What's that mean to me? That if you bought the wrong stocks, you're screwed. So that's number one. Number two, you might ask, well, why don't we look for stocks that refuse to go up so if the market goes down? Well, there's nothing in there that looks like it should. It's just not there at the moment. Now, I'd love if some things were there at the moment. We've been looking at playing strike price plays, and a lot of what we've been doing is I've been graphically showing this. Now, I'm not getting all the feedback I want, but I'm watching this. So we shorted 100 shares here. I posted it. The whole market went nuts. So I realized I was a little worried. Like here, this was posted an hour ago. IBM with big open interest at 185. Now, this was also posted in the chat so you could sort of get a perspective. I'm going for 185 on the other half. I bought back half here. So we shorted it here, 186.60. Not a lot, but this kind of stuff adds up. With market so strong, I have to have a stop on the rested entry, but then I changed it to here, to the ATR trailing stop right in there. We got out. We haven't looked back. So I like doing these kind of graphics. I hope you're enjoying them. They seem to be working. So, and if you just joined us on the YouTube live, I'm taking care of 21 snakes over here. It might be 20. Holy cow, what is that? So, sorry about that. But no, that's a rubber snake, by the way. So just let you know, but that scares me too. So, but getting back to it. So, what else am I watching in here? Well, definitely the theory, and this is the theory everybody has. The theory is, why on earth would the ES and NASDAQ go up this much? You see the little bull flags that the bonds are down 207. Well, number one, the bonds were up yesterday. Number two, it just nothing looks bad. The key now is, do you play the laggards? That's what everybody wants to know. Do you play the laggards? And that's where we are at the moment, deciding if we want to play the laggards. So probably, well, that's what I'm looking at. So when I mention laggards, I'll show you a couple that are laggards. So number one, if the Russell's coming back, which it is, just seems to me the XBI is the way to go. Now, the XBI, this is the biotech index, has been a dog. Now, this goes against my stuff. I usually like to buy on the way up. If I buy any XBI of the actual index, well, I'm going to take it off like this. So we're going to make it like this. Oh, if I buy it, I'd much rather, if I buy it here, I got to have a stop here. On the other hand, with the ES up 40, this is probably going to be something for next week. Now, I'll tell you, the ones that are the best quality are starting to go up. If I want to play a laggard, what I'm going to do in here is I'm going to play things that have that washout and then a bull flag. So, well, I wouldn't call that as much a bull flag as sort of an inverse head and shoulders. The problem with those dots and dashes, that makes it a little rough. So right now, there's a lot of divergences. We all know there are a lot of divergences, but I'd much rather play the ES on the downside if I see something like that. Or an overbought sell-off, overbought after a sell-off. But at the moment, I just don't see anything. I just want you to know that. I would love to just tell you, go and short the world or go and buy the world of laggards. Usually when I've seen this kind of narrow stuff, I know it's bearish and all that stuff, and every pundit saying that. But I'll tell you right now, I would look to buy laggards. The problem is the laggards, I know this sounds corny, but they're still lagging today. And that's the problem. But that's why I'm looking at like XBI. I'm trying to look at certain things that just might pick up the rear. So that's what I'm looking at when it comes to this. Now, how would I play an XBI? And now let me just tell you, I don't want to put specific recommendations over in in the free thing, but I'll give you what I'm looking at. So we're going to construct it. We're going to construct this. So what we're going to do in here is all I'm going to do is, well, I'll show you. We'll take FinViz. FinViz is free. I like free. I'll show you what I'm looking at. So I haven't even logged in. I'm sure FinViz is thrilled with that, but they have a premium site. There, I haven't even logged in. So all I'm doing in here is I'm going to take active stocks in the biotech arena. To me, that's the forgotten. Now, if you don't want to do biotech, we could do healthcare. So you're going to see it's 1,200 stocks. I hope you could see that. I don't know how big that is. There you go. 1,200 stocks. That's all I'm looking. And now all we're doing is looking to play the laggard play, laggard trade. Keep in mind, the Russell has a lot of regional banks and stuff, but biotechs can go up on their own, especially in any kind of rotational thing. So now I'm going to take optionable and shortable. This gets you down to 800. Believe it or not, it went down by 400 if you're optionable. Second thing, I want at least 100,000 shares today. It's noon. Now you're down to 414. Then I want the price, and this is just being a price snot, but I want it over 7. Now we're at 240. It's getting manageable. Now, I'm not saying to go and watch them all like a hawk, but now I want to take the ones that are already in an uptrend. So I'm taking the ones over the 50 moving average. It's all of 145. I think we can watch 145 in a watch list. So all I'm doing in here, and I wish I could save it, but here's the scan. Here's your scan. There's your scan. I have it over in the YouTube live, and I have it where I am. So in the Essentials room. Essentials room is a really big deal, by the way, to get a taste of all the traders with Simpler. So a lot of us have different ideas. I'll play stocks. I'll play options. I'll play whatever has a definable pattern. Yeah, my side is Chart Patterns Mastery. So 145 stocks. That's it. 145. Now, when I go to this, let's say I sort by the cheapest. And some of them you're going to see look a lot better than others. Hey, BHC might be okay. You see that they're retaining a bullish structure. That's all I'm looking for. Retaining a bullish structure. This one, well, I'm looking for a tight structure. There you go, RCM. So I think they do, aren't they from Athens? Aren't they a band in Athens? Oh, no, that's REM. Sorry. RCM. Look at that. acting like dirt today, but that's the kind of idea I'm looking at. CMPS is a sore subject. Now, here's another thing. If you want to play underperformers, one of our most successful thing has been playing rectangles and waiting for the break. Yeah, we missed that one. So we've played that for years. But IMTX forming a bull flag. So RCM forming a bull flag. So the next thing we do is this. We'll go and we'll create like a watch list. And now one way to do it, but this is real labor intensive, is you go and take all of these and you actually can highlight everything. I wish you could highlight all 8 pages. Go copy, and I think this works. Let's just try it. Create watch list. So we're going to go. And then we're going to press that highlight button. We're going to import everything. Yeah, there they are. Now, it's not perfect. You're going to get some that have like weird symbols. But it's one way to do it. One way to do it. And then you could just do this. So you go to the next. I know the scene's weird, but it works. So I'll go to page 2. Left click. Right click and copy. Import. Add to current symbols. See that? Paste. Add to current symbols. Now you got more of them. And you can just go through and you'll get to 145. Now, obviously, ADR isn't one. That's because some of these stocks are American depository receipts. But it's a really cool way to do it. Now, you might ask, why are you doing it that way? Because a lot of times we're looking for unusual call activity. And the call activity to me at the minimum, is if their calls sizzle, which is the normal call activity, like it's 10 times normal, and go through these. And like I said, all I've done so far is 2 pages. You can just go through it. Really, it'll take you about 3 minutes. And now you're up to about 60 of them. And when you go by last, maybe you only want to play them up to 30. See, I've gone up to 30. Take out ADR. But maybe you want to do it because I listed them by price. Oh, then we'll go to the next one. Now we're up to the $40 suckers. And there's a method to my madness here. So I'm going to go in and paste. Add to current symbols. Now we have them all the way up to 67. Now, one thing I do in here, like I said, anybody can do this. Anybody can do this. So what's the theory in here? The theory is if the market's open down, you have a stock that looks pretty good, sometimes you can buy some cheap calls, especially if the whole market is doing this. So that's what I wanted to show you. So when I look at this now, the first thing I'm going to do is I'm going to see if there's any call activity. About 90% of takeovers. I've traded takeover stocks for years and years and years. And 90% of takeovers are over the weekend. Now, I will tell you the only stock that I am frustrated that I didn't buy today, not sell, but buy, was Humana. So Humana had bad earnings. They pre-announced bad earnings, but guess what? There was a takeover on the table up here. So if there was a takeover by CI up here, then why wouldn't they think here? Am I regretting? I didn't buy cheap calls this morning. There you go. You had your washout, you had your bull flag, and that was it. That was it. That's where you buy like cheap calls, betting on maybe something happening over the weekend. Right here. That's where you want to buy it. Here's a little unrealistic. You want to buy it when it breaks that rectangle. We just talked about rectangles. Chart pattern mastery, that's the kind of stuff we go over. Right there. 380 calls were 40 cents. Now, that's not reasonable. If you go over Thinkorswim and somebody tells you they were 40, that's bunk. Now, what you got to do is this. You go to that right there. That's what we do. That's where it was breaking. Look at the bottom. The bottom, that gray box. It's 1026. So now let's go to the 380 calls. And let's go to 1026. This is completely reasonable. Was it worth doing? Well, they don't trade that much, but let's look at 1026. Yeah, they were 67 cents. So right here when it broke, you could have grabbed on right here. Yeah, they went to $2. They're even higher now. They're $3. That's a great way to play it, because if you're wrong, you're not going to lose that much money, and you're going on that. You're going on that break, and you're going, the whole market's going bonkers. And you're going on a rumored takeover. So that was a good one. So next thing. So let me show you this. So we're going to go into that group I showed you. So we're going to go into that healthcare. And we're going to go over here to healthcare. The one I did for today, February 2nd. And I'll tell you right now, I'm a little opinionated about one stock, RCM. I wish RCM didn't have, well, it has earnings coming up the end of February. Remember, I showed you the inverse head and shoulders in RCM. It's not trading any calls today. That's RCM. So the first thing you might ask is, why did it stop here? And it stopped here probably because of that resistance. Right there. On the other hand, let's say you want to play RCM. You don't want to buy it overnight because you're always worried with a healthcare stock that they have some bad trial or something. So what can you buy to participate if it breaks up? But if it breaks down, you're not going to lose that much. Well, probably the 10s. You don't want to buy the 12.5s. They're too far out of the money. So where are the 10s? There they are. Now, if you want to buy calls, I'm not saying this is going up. In fact, it got down to here. Those calls would have been 50 cents. Go and look at the puts. Take the midpoint of the puts, which is 17.5 cents. And then add it to the intrinsic. And that's where you're going to get filled. So 74 plus 17.5, 90 cents. They're not going to fill you at 90. The market makers want an edge. But theoretically, that's how you value it. You take the midpoint and the intrinsic. That's how you do it. You're not going to get them there. Like I said, when I like a stock like this and I see the whole market get walloped on the opening, I want to try to buy at support. The biggest problem I have with this Is there so many warning signs? I mean, this is a big old short squeeze. We know that. And no doubt, big old short squeeze. So then it comes down to, do you just go and buy a call in here? Figuring that if the whole market goes up, this inverse head and shoulders is going to work. Even with warning signs. Obviously, warning signs don't mean a hill of beans today. So, and just keep that in mind. So, first thing is to show objectives of the broad market. So, objectives of the broad market. This was something we've posted on Chart Patterns Mastery for a long time. Number one, this was 2 days ago. The ES support zone. And held that zone. It's a zone. NASDAQ held the support zone way down here. So next thing, daily chart. Where could everything go? Well, here's another rectangle. It's hard to believe. Really hard to believe when bonds are down like this, but there's your rectangle. So where's that? And here's another rectangle. So usually I just take the width of the rectangle. That's a pretty conservative way of doing it. So you got this. There, that's it's hard to believe. 700 points. Where's 700 points? Now that gets you to there. Right there. Now the worst part, it's not that far from there. Just keep that in mind. Maybe another 100 points. But then you have another rectangle. Let me share this. I love sharing these images. There's a rectangle. How about the ES? Well, that already had a rectangle that we've been harping on right here. That one. And there are two of them here. One is a rectangle, one's a possible bull flag. So let me show them to you both. That's your bull flag. It projects about 273. Here's your rectangle. That projects about 135. It's hard to fit on here. 135. Guess where that gets you? Right where it is. Right where it is. Now, on the other hand, 273 gets you another 133 points, gets you up to here. And are there warning signs? Heck yeah, there are warning signs. But there's no reversal patterns yet. Just keep that in mind. No reversal patterns yet. Warning signs, damn right, there are a lot of warning signs. So just keep that in mind. Definitely warning signs. And then the next warning sign is this. Is the bond market back under the 20 moving average? I've been using that 20 a lot. No. See that purple? Is the ES over it? Yeah, it's over it. Is the NASDAQ over it? Yeah, it's over it. Is the Russell over it? No, it's at it. How about the XBI? I bet you know where it is. It's under it. That's why I like the XBI. I'm just going on that usually these indexes snap into line. So just keep that in mind. Now, as you see, this Now, when I mentioned short squeeze, a short squeeze is when you just go up parabolic like that. Now, if this looks familiar, and sure, that's a Stewie pattern. Or if you highlight it, it looks like Stewie from Family Guy, especially if you've been going out to a bar at lunch. But you see the inverse head and shoulders. Yeah, that looks a lot like that $10 stock I showed you. Only difference, this inverse head and shoulders had nothing above it, while the RCM did. So that's where you are. And that's where I am right now. There's no way I'm fading the markets. If I fade any markets later, number one, I have to see this form some kind of like rollover combined with a bear flag. That doesn't mean to chase it here. It means to evaluate and look for opportunities now. And that's what I'm trying to do. So that's where I am, trying to keep myself out of trouble. Now, I will tell you, are there any, well, it's easy to say, are there any stocks acting poorly? Heck, there's a ton of stocks acting poorly. Look at that. Look at that net New York advanced decline, net NASDAQ advanced decline. That's not the NASDAQ 100. That's just the net of all the NASDAQ stocks. More of the story, that usually means if you try to buy some stocks against the market, you're not going to make money. And then comes the big kahuna. The big kahuna is, do you buy the weaklings, figuring they'll catch up, or do you short the weaklings because they're acting like dirt? And that's an extremely tough call. Like this, I'll give you a perfect example. And if I'm quiet, it's because the longer I shut up, the less money you're going to lose. I know that sounds odd because I'm biting at the bit to want to short things or buy the laggards. But I look at this. Do you see anything in here that looks like a definable chart pattern? I don't. I'm looking, but on a 1 minute, I don't see them. So just to let you know what I almost posted, and thank goodness I didn't. Lamb Research refused to go up today. Refused to go up. Just refused to go up. So I was looking at the 835, 830, 825 spread under the market. It was like $1. Well, it's now zero. I'm still interested in these. But what I think you're going to get is something like this. You're going to get some kind of pattern like this. That. Then you can try to play something to the downside. Now, I don't care if it's the Qs or the ES, but that's the kind of thing you're looking for. You're looking for something like that, some kind of bearish pattern. Right now, it's too early in the day. So you see what happened when it got over right here. So that's what I'm going to watch. And I'm definitely going to look for stocks that refuse to go up, no doubt about it. If I'm going to play something to the downside for expiration only, like SMCI, it's been a monster. And now today it refuses to go higher. IBM was a monster and it refuses to go higher. So I'm going to try to stay with that kind of area. So just to let you know. And besides that, I stayed out of Amazon, stayed out of Google, which has had a heck of a move up and down. Didn't touch Meta. They're going to add a dividend. They're considering. I hate when they say considering, as I like to buy on rumor, sell on news, but they're considering. So not touching it. SMCI on the bottom, I might look as a short later. And everything else, I can't tell a darn thing at the moment. All I can do is scan. Now, here's a good one for you that Penn's mentioned in the Essentials room. And thank you for contributing. I really appreciate it in the Essentials and in the Chart Patterns Mastery. Do you mess with Tesla? Mess with the laggard. I sure can't buy it when it looks like that. So I can't play it. Just can't play it. How about RCL? Well, I'm telling you right now, when you play these stocks, if you see that red candle at the end of the day, usually there are sell-on rallies. But like I said, the market's up so much, a lot of bets are off here. Now, I got another one for you, Penn. The more likely election results, let's say they tighten or this or that. So if Trump's going to win, now I'm not saying he's winning, but if he gains in the polls, does that mean green energy stocks go down? Indeed, it does. Look at that. Same with Tesla. In fact, I bet they correlate pretty well. Let's see. I already knew they did. There, look at that. So definitely December 1st. December 1st. January 1st. So those green energy things not doing so hot. So, just keep that in the back of your mind when it comes to that about correlations and about elections. Now, really interesting is to go to predict it. Now, this worked great during the day when you had the Iowa caucus. This is where it gets interesting. Just go to predict it. That's free. Just go to that. And you see, Trump's in there. Biden's 85%. This is one thing I'm watching. That presidential election winner. And I don't believe that. Right here. But I'm telling you right now, there are a couple of things that are really important, and I would watch this like a hawk. I don't care about 48 and 44. If something happens and Biden gets knocked out for any kind of reason or Trump gets knocked out, then you might see the first solars go up. So just keep that in the back of your mind, that kind of stuff. Election stuff can matter. And also in the chart patterns mastery, I'm here all day. Well, I'm actually going I'm going to a spa for 3 hours and I'll be back for the close. No, all kidding aside, I'll be posting some graphics. So intraday. Not sure if a lot want that, but I love showing graphics. So you see the bull flag here. You see the bull flag here. Then you see this. So I'll be trying to post graphics that show really defined patterns. Here's a defined pattern. That's what I mean by defined pattern. If you take everything off, that's a bull flag within a bull flag right here. That's a tight pattern. There's a tight pattern that if it breaks, it probably breaks that. I'll be posting those if I see them. Now I'm watching that. So definitely watching that. Now, this is a tough one about thinking about it going down because it seems like nothing wants to go down. It'll probably be led by the NASDAQ. The first shot across the bow is going to be if this bull flag, and I'm talking out loud, this is how I'm trading, this is how I'm transmitting to the chart patterns mastery. If you start to see bull flags fail, yeah, I'll start getting bearish. So usually the first shot across the bow is a break. It gets oversold and then a bear flag under resistance. But we don't have any of that. It's too early for that. Just too early. I'm just throwing it out of what I'm going to be looking for. Now, there is something else you could do. Let me just show you. So let me show you what we're talking about. So I can show you this. It's sort of, well, you could do it this way. You take the stocks in my main list. This is something I compile for the chart patterns mastery room. I change this all the time. And you look to see if any of these are starting to develop bear flags intraday. Now we have scans to do that, combining squeezes. So just trying to see if there's anything. Look at that. What looks bad in Broadcom? Nothing. But I bet if you go through these, they're going to, nope. Look at that. No bearish pattern. I'm looking for stocks that are acting so poorly that if this does go down, that's a massive if. They'll be the first ones to go down. There's one. Not bad on a 15, though. Costco, I'm going to Costco today. I would not mess with Costco. I'm diabetic, but they have a chocolate cream pie. It's brand new. It weighs about 10 pounds. No, I'm not going to get it. No, I won't get it. but I'm tempted, but I will not get it. So that's what I'm looking for right there. I'm looking for those patterns. Here's a good one. Were you talking about Restoration Hardware, or were you demanding Ragion? I never know. But yeah, there's a great idea. There's a great one. So in there, that's a great idea. You're trying to take the worst of the groups. The only problem with Restoration Hardware, there isn't. Your whole theory is if the market goes down, those will be the first to go down. So I like that idea. That's a great idea. You're taking what's acting the worst. Only problem with Restoration Hardware, it doesn't trade a lot of options for expiration. That's a good one. I got to add that to my main list. Even though it's only traded 200,000 shares, that's a good one. You got to think that. AMT, why is AMT down? It's a REIT. Doesn't like interest rates going up. There's your restaurant. I had to put it there. First Solar, we talked about. Tesla, we talked about. Enphase in the same group with the First Solar. And there's another one that's acted like garbage. So it's just had such a bad time already. But yeah, Home Depot, I do not understand why that's down. I went there yesterday. So they just don't care. So I will tell you something interesting, though, is why is the non-farm payroll so strong? So it's nailing bonds, but retail and travel oriented are down. Figure that one out. Even Constellation Brands. Very, very curious. I know OKTA's down because Team is down. That had, I guess they didn't like the earnings. But right now, from my money, I'll look for what is acting the worst. That's how I'm going to try to play it. And Louis, it's pretty funny. I'm not as snot as I like going to Wendy's and Whataburger and all that. And so last week, this true story, Louis, I'm like, screw this. Why don't we go to Golden Corral? It can't be that bad. We were there about a year ago and it was bad. And we went back to Golden Corral and it was horrible. Even their apple pie was bad. So I'm just in awe. I'm in awe how it can be so bad. How can you mess up apple pie? So just Golden Corral, I'm not going back to. So I don't, yeah, sorry. I don't know how I got off the beaten track. So just to let you know, not giving advice about the NASDAQ other than so many things are overcooked. When it's acting like this, I'm going to look during the day for what refuses to go up and bet on that if this goes down, they'll be the first to go down. But in answer to your question about working and not traveling, how about not eating? Why is McDonald's down? In fact, you got Lowe's, McDonald's. Yum Brands. This is really, really odd. I don't know about you. I find that odd. Deere, yeah, construction equipment, Pepsi, Nike. But non-farm payrolls was stronger than expected. It's incredible. This is a big warning sign. It's just not a warning sign today. So just keep that in mind. Also, keep in mind about the bond market that there's still a tremendous amount of issuance. And number two, the monthly bullish pattern has been invalidated. That to me means every overbought MACD has to be faded. A la now. Nobody expects that. Nobody expects that to test the lows. So right now, though, no idea. No idea what to do. And I wish I had all the answers right now. I don't. I do know for the chart patterns mastery, I still like playing IBM to 185. Still like that to 185. I like playing Humana later as a bullish pattern for, let's say, a month from now. But everything else, I can't tell until later in the day. And that's where I am at the moment. This is the problem we have with the China market. We need to see that whoosh again, followed by a bull flag. In fact, I warned about this in the chart patterns mastery that when something's in a big bear market, every time the MACD gets overbought, you can't chase the product, which is exactly what's happened now. So every time it gets overbought in a downtrend, the only way I'll buy it is if it gets overbought and forms a defined bull flag. So I can't go near China. So just keep that in mind. Yeah, I don't know about PSNY. I have a tough time with those dollar stocks. I love these kind of questions, though. No doubt. Laura, that's a good question about the grocery stores. These are great questions. I really appreciate it, especially when I'm stuck. There's another one that refuses to go higher. So, Costco. That's the only one. And it's very interesting. You might say, don't Home Depot, Lowe's, and Costco move together? No. This mainly moves with BJ wholesalers. And that doesn't even work. So the correlations I work are breaking down at the moment. So when that happens, I don't go and play with the snakes. I just back away. But I do like the idea of IBM to 185. I still like the idea of IBM to 185. That's my favorite idea today. So just to let you know. So and that's about it. And by the way, when I mentioned snakes, if you just joined us, we had a big flood. So I had to take care of 21 of my daughter's snakes because we have sanding and painting, and you don't want the fumes to hurt. And I have 21 snakes behind me I'm taking care of. And Disney, well, ask Mike and NC about Disney. He's called that. And they are not making that easy either. We were talking about playing this to 100. Playing that to 100 because of that gap. And it still might work. It just has earnings next week. But we were playing a butterfly to 100 for this week, which, Mike, I think it moderately worked. Not great. So all I know is that I try to play these after earnings when we see consolidation patterns. So Disney, I totally see what you're talking about. Plus, it has a relatively low bar relative to other stocks. So, yeah, I totally see what you're talking about. And that's where I am at the moment. I don't see a reason to go crazy on the long side or the short side. And you saw the second the market looked bad, Nvidia, these stocks exploded. So if I do anything, if I want to play anything to the downside, it's got to be something that every little twerk of the markets, it doesn't go up. And every little downside twerk, they have a little move to the downside. They're ultra sensitive to any move to the downside, and I don't see it at the moment, unfortunately. And by the way, a lot ask me about capitulation tops or bottoms when it comes to volume. And what's amazing is, like, a lot asked, was SMCI capitulation top? And like I warned, no, it just didn't have that whoosh on the upside. It had more volume when they pre-announced than it did on the earnings. On the other hand, look at IBM. That's capitulation. That's why we're messing with it on the downside. And then, Laura, you're talking about Meta. Before me even looking, do you think it's a capitulation on the upside? I don't think so. It looks like a lot until you zoom out. That doesn't look like anything. It's amazing. It just doesn't have that whoosh. It's amazing. Even when you zoom out like that, go and check out IBM. That stands out like a sore thumb. Very rare to see that kind of capitulation on the upside. You saw it in Nvidia a long time ago. Not that. Especially if you had the wrong symbol. You just didn't have it. Just didn't have that kind of capitulation. Has Nvidia ever had it? Now let's look. Now, capitulation for me is after a protracted move up. Look at this volume. It just doesn't have it. Usually capitulations are on the downside after a protracted move down. Just keep that in mind. None of these are just where you're like, oh my gosh, that's ridiculous. So let's take what stock? Well, this one is a sore subject, but I'll show you CCI, Cell Tower Company. It's hard to look because I got out near the bottom. There's your capitulation. But there was your real capitulation. And then the other time I care about volume is if you see a breakout. So I only have 3 times I look at volume. A breakout on big volume, a capitulation after a protracted down move, or a capitulation on the upside after a protracted up move. You don't see them very much. So but IBM has one. It's funny you mentioned about Tom DeMark. Yeah, I use chart patterns more. I mean, I just like to use the chart patterns more. But do they have it on like TradingView for free? Now, he gets really pissed off. I've met him. He doesn't like when they're free indicators. He usually tries to wipe them out. So sometimes people like spell his name wrong and stuff. But to be honest, I'd rather pay $69 a month. He deserves it. I mean, I really pisses me off not to pay for valuable stuff. So Big Bad Voodoo Daddy should pay for the voodoo lines. I mean, he makes me, David makes me pay for the voodoo lines and I work with him. Yeah, that's real fair. But, no, I think that's I didn't know he's only $69 a month. It's worth it. So, yeah, I should charge him for that. But no, voodoo lines work fine, especially, I'll tell you when they work well. They work well at just like somebody mentioned about the 1272 with the ES. A lot of times when something is at a new high, I don't know what to use. And the voodoo lines come in extremely handy. So just definitely in there. There's a good one, match.com. Yeah, that's another good one that's refusing to go up. So right now, I'm not doing a lot. If I do anything in here, I'm going to take what looks the worst. Now let's look at match.com again. I know I don't have a lot of time, but that's a great idea. All you're doing in here, tell me if I'm doing it wrong. But and by the way, it's nice to see you. So you're going on what it refuses to go higher. Now, when I traded for a discount brokerage firm, didn't trade. I took orders for clients, but they let you trade commission free. That's where I build up money to be able to go to the floor. And the whole idea in here is back then was if a stock refused to go up and you started to see internals weaken or bonds weaken, then I'd short it. Here's a perfect example. The problem is, do you buy the 37s for today at 6 cents? I don't know because I'm not sure when that's going to sell off. Now, I'll tell you on how I would play it, Em. In fact, let's take the other. Darn it, I don't have enough time. Yeah, I like all of these. Alumina. Yeah, I like that idea. But I'll show you how I'll try to trade it. That one has too much support. That one, not bad, except earnings coming out. I like that match.com. But this is how I'd play it. I'd play it like this. If I see the ES start to do that, if, that's a big if, and I watch Match.com slowly go to that strike price. Obviously, the whole market's pulling it up. But I'll show you on how I would play it. If I see this slowly going down, like I said, it's not, it's the other. And I'm looking at long ideas too. But if I saw that doing this, sort of flatlining, and maybe for a little bear flag, and I saw Mitch slowly form a bear flag, but closer to the strike price, then I'd look to buy cheap puts for the day. So thanks for suggesting that. I really appreciate it. So everybody take care. Have a great weekend. Let me tell you what I think the market's going to do. I think it's going to continue to be volatile. No, that's my imitation of the pundits on CNBC. Literally, this is beginning to be a blow off top. But is it really a blow off top as so many stocks aren't participating? So it's going to take a lot of research on my part to try to figure it out. So do these catch up? Or is this so negative the whole market gets destroyed? I haven't figured it out yet. So you see what happened in Mitch. Here you go, Em. Exactly what we just talked about. The market went up enough that it wasn't going to go down. So take care, and I'll talk to you later. Thanks again for the great suggestions and the great adds to the chat.